Okay, I think we can slowly start. So, welcome again to everyone who joined us today, and thank you for your time. Today, we focus on how Web3 accelerators power scalable ventures. And we have special guests Maddy Bergen from Elixir Capital, program manager there, and also Tom Purdon from Brinc, and yeah, head of programs, especially for digital assets. So, thanks a lot for having us. Pietro Negri unfortunately had got a bit sick, so he's not able to join us today. But I'm pretty sure we're going to have a great session. So for today, how we kick off and how will be the structure is first to give the participants who don't know yet about the blog a quick intro. What is the blog about? What is the mission and philosophy, as well about the Investor Circle? And the second part will be a few insights about the structure of Web3 accelerators. And then we dive directly in about our experts here on board, how their Web3 accelerator work, what are the next trends, why is it a big advantage also for investors. So we're going to have our fireside chat there. So yeah, let's dive right in. So the block is a virtual chamber of virtual assets. It's based in the UAE and following the UAE mandate. So the block itself supports different elements in the ecosystem. So it really depends on the product life cycle as a startup, as an investor, as a corporate or regulator. We are very deeply tied with VARA, so especially if it comes to also licensing activities, special regulatory topics. We also offer their advisory as well, but overall it's really macro support. That's why it's a chamber with different programs for different needs. And the great thing is, in Q3 we're gonna launch also our physical space in the heart of Dubai in One Central. It's already a very popular location also for other Web3 players. And on the one hand, there will be an experience center, which includes also events, podcast studios, different initiatives, but also a co-working space for all members of the block. It's based on application only, so there will be also a proper screening process for members to join, and a special part, which is also part of today's webinar, is Investor Circle, which is dedicated for all type of investor profiles. So it doesn't matter if you're a family office, angel investor, VC, it's all about your interest into the blockchain virtual asset space. So the Investor Circle does not only hold initiative like the webinar about the educational part and industry insights, but also we offer deal flow from our members, where we have a special announcement just going live today, which is also Oken. Oken joined us also recently as a member, and we are very excited to share more details on that, as well as it's about bringing gold reserves on chain. So this is also one of our prime deal flows at this moment. But besides that, we also support VCs with different needs and also collaborate with other players such as accelerator programs, such as other VCs, other blockchain, like other chains as well. And yeah, it's really a macro ecosystem setup. For today's focus, as I mentioned, will be the Web3 accelerator aspect. And if we think about Web3 accelerators, why they are essential for crypto funding, we know in Web3 it's quite a dynamic space. They face unique challenges compared to traditional tech ventures, including designing robust tokenomics, navigating regulatory uncertainties, and really building a scalable infrastructure for their projects. And this is where Web3 accelerators are providing special resources, strategic support to address these complexities. And this accelerator concept itself started in the 2000s already in San Francisco, but it got even more advanced with the wave of different technologies. So even for Web3, accelerators are really a backbone to support investors and also startups to fine-tune and scale more their project. And one of the key advantages is access to really crypto grants and investments that different accelerator programs offer. Also specialized mentorship with experts from the industry. So really guidance on fundraising, token economics, but also ecosystem integrations. So accelerators can also connect startups to VCs, to protocols, or developer ecosystems. Another important part are also technical and regulatory support. Depending where the accelerators are focusing on, most of the Web3 accelerator offers hands-on assistant, for instance, with smart contract development, token design, or compliance frameworks. Last but not least, also post-program continuity, what a lot of programs are offering as well. If we look at the right, choosing really the right accelerator is super important, because right now we have globally 150 Web3 accelerators. They're really across US, Europe, and Asia. And some of them have their specific focus. For instance, we have from Avalanche, they have their own accelerator. So depending on different chains or different sectors as well. There could be focus areas like deepen accelerators, RWA accelerators. So really finding the right, well-aligned accelerator is very important. Also the funding model, does it fit off in terms of receiving equity, token warrants from the accelerator, or is it just the strategic support, what is needed for startups? Also, another consideration is as well early stage versus growth stage. So the earlier it gets, usually the more support is needed from the accelerator. And also, selectivity. In the meantime, there's also a lot of accelerators. For instance, Tom, you're also one of the panelists, Brinc, also very known for being super selective. Also, Maddy, you're collaborating with Hub 71. Later on, you will tell us more, but there's also high selectivity. So is there also an additional value add and advantage to be in a prestigious accelerator as well to get additional funding? So that's also another aspect. But also the reach. There are also different formats where accelerators can focus on media, outreach, higher visibility, and also supporting post-program with alumni groups and raising capital further. So that's also a very important aspect. That's again also the key in terms of the dilution. What are the terms? Also the ecosystems, the selectivity, and also the time and resource commitments. Again, every accelerator, they have different timelines. Some are really express programs, which are, for instance, 6 weeks, 12 weeks. Some other go longer, which are 6 months. So it depends really which support and in which depth the startups require the accelerator support. As I mentioned at the beginning, we have already a lot of accelerators globally, and also so many Web3 startups has been created, founded in the past years. And the more complex it gets and the most fast-paced it gets, the more accelerators are a good guidance also for VCs, family offices, or investors when they're running through accelerators. There's usually in the latest statistics that startups actually receive 2 times more funding after they completed accelerator programs. So that's something also understandable when a startup goes through a program, they found their weaker points, they develop further, and they're more ready to start their fundraising process. So this is something, again, where we see a very good development nowadays of multiple accelerators with different scopes, different offerings for investors as well. But I would say let's dive right into it, like how Web3 accelerators are in practice. What is their scope? And yeah, I'm very excited to have the panelists here with me. And yeah, before we kick off, I would love to get an introduction from both of you, especially also for the accelerator programs you're supporting. Maybe you can brief us really what support do you offer for Web3 startups in general, and also looking at emerging markets, what has been past initiatives and your scope there. So let's kick off with Maddy. The stage is yours.
Awesome. Thank you so much, Sarah. Hi, everyone. Great to meet you. My name is Maddy. So I'm the program manager at Elixir. I'm currently managing the Hub 71 digital asset program, and also we're now running a program with JETRO, the Japanese government, to help bring more startups to the UAE. Just a quick background on myself. So I have previously managed and grown a Web3 growth studio. So I've worked with over 30 early stage companies in their fractional growth teams. So I understand what it takes from like a startup perspective to really grow, hire, scale, all of that. I've also helped build out a different like accelerator venture ecosystem in London with a hedge fund that had 1 billion in AUM, and have also previously run programs to actually bring traditional Web2 VC investors into the Web3 world back in 2020. So the landscape has definitely changed a lot since then. But just to give you some more context on Hub 71, so Hub 71 is Abu Dhabi's global tech ecosystem. So it was established by Mubadala, one of the largest sovereign wealth funds in the region, to attract more startups to come to Abu Dhabi specifically and kind of contribute back to the economy here. And so there are three tracks to the program. So there's a digital asset track, there's a access track, which is essentially for general tech and AI startups, and then a climate tech track. And so Elixir Capital runs the digital asset track. The accelerator is structured over a 1 year period with a 3-month intensive burst. And so I think that's where we get really hands-on and really involved to essentially really support and handhold like startups moving to Abu Dhabi from all across the world. Just to give you like a brief understanding of our next cohort, because we're seeing way more traction coming into the region specifically. So we have Plume Network, which is a huge layer one reward asset chain. We have Cast, who are doing stablecoin cards. We have Merkle Science. We have One Money, who are started by the previous CEO of Binance US. So essentially, the companies are getting larger and larger because the value proposition of the UAE specifically is becoming more attractive. And so at Elixir, we really help operate programs to help companies expand to this region.
Thanks a lot, Maddy. That's a super great intro. And I'm heading over to you, Tom, and about what's happening at Brinc.
Oh, thanks so much, Sarah. Can you guys hear me all right?
Yes, we can hear you.
Perfect. Awesome. Well, firstly, thank you so much for having me, Sarah. Really excited to be here. I'll just give a very brief intro of myself. So I come from an entrepreneurship background. I started an e-commerce business during COVID. Shortly after that, I finished university, joined Brinc as an intern, and yeah, I'm about 3 years into my journey. And I'm currently heading up programs for digital assets globally. So right now, our focus is really just helping ecosystems building out. So for example, what we've done recently with Sui, Sui, obviously one of the hottest layer one ecosystems out there. We help them get 600 applications. We help narrow that down to the 5 top ones from those 600 and help them build on Sui, so connect to all the possible resources. I'd say slight differentiator from, obviously there are 100 different accelerators out there. Slight differentiator is a couple things. So firstly, when you meet the Brinc team, you'll realize everyone in the company comes from an entrepreneurship background, especially from leadership. They've been through it. They understand what it takes to run a business, and they understand what it takes to, go 0 to 1 and then 1 to 100. Secondly, I think a big difference you'll see is our global presence. So we've got a really strong presence across Southeast Asia. We've got offices across India, and we're very strong in the Middle East as well. So we help companies not only grow their businesses, but connect to resources globally. And of course, beyond that, we take a very personalized approach to startup support. So over the course of 12 weeks, we'll try and understand exactly what their pain points are, how we can help them pivot, how we can help them do those micro adjustments that lead to success. So that's a very quick overview. I'll just run through a couple of the programs we're running currently. We have one out of Hong Kong with Octopus, IDA, XTC. That's a really exciting one because it's really bringing real world assets and some of the use cases the crypto's always had into actual use. So Octopus are one of the main payment infrastructure providers for Hong Kong, and we're helping them find 10 startups that are going to be using their infrastructure and try and find innovative ways to introduce crypto to the wider world. We are also running a fair data accelerator out of North America, our first program in North America, and currently also winding down our SUI program, which is, had amazing results, and the teams have done incredibly well coming out of it. But super excited for what a future is to come, and I'm sure I'll be talking about going into more depth on some of this over the course of this panel. But yeah, thanks so much for having me.
Super great. No, I really thanks for both of you also introducing your programs, and it's so clearly what you both have highlighted, being hands-on really with the startups, and you support different programs, and also Maddy, as you mentioned, Hub 71, you have different sectors, also Tom, different programs for different sectors. What would you say right now, as we always talk about hype, narrative, long-term trends, but what are for you the top 3 verticals within Web3 you're most bullish on, also from your accelerator programs where you see they run the show for the next 12, 18 months? And yeah, like it doesn't matter if it's RWA, Deepen. So I would love to hear your thoughts in terms of sectors also that you're dealing with in your programs. Yeah, Maddy, how's your view on that?
Yeah, of course. So I think just some general market context that we've seen really change over the last year specifically is I think we've really switched up the mindset of what mass adoption really means. And I think we've gotten to the point where we've realized mass adoption of blockchain technology comes from mass integration. Back in like 2021 or the NFT days, it was all about onboarding more people to crypto. But now I think it's actually becoming onboarding like crypto rails on the back end, and the consumer doesn't even necessarily need to touch crypto. And so I think specifically what we're seeing in the UAE and Abu Dhabi in particular is that those kinds of use cases coming to life. And so I think in terms of the Hub 71 accelerator, it's more around those like real world asset use cases, stable coins, innovative DeFi that essentially allow these institutions to utilize crypto to its potential, rather than seeing the consumer use cases. So we're more focused on the institutional and financial applications, and I think that's where a lot of the market is now heading. And I know that we'll touch on a lot of different trends as we go, but I think the market has just really fundamentally changed. And even if we look at different altcoin performances in the last cycle, I mean, they haven't really moved as much, and Bitcoin has really led the whole narrative. And I think with all the Bitcoin corporate treasuries coming into play now, and even Ethereum, hopefully, will have its run up, I think the market has just fundamentally changed, and it's moving more towards institutional use cases. And I think that really follows like Hub 71's core thesis.
It's a very valid point you mentioned, especially since 2 years, right? We see this push from TradFi players like BlackRock and other big asset management firms, also governments, right, backing up Bitcoin as well. So having that push from the traditional industry is a big one and impacting directly also, as you mentioned, right, stablecoin, RWA narratives, for instance. So completely agree with that. How's it for you, Tom, like from your perspective, and also with activities at Brinc, where do you see like these are the top verticals?
Yeah, so I think Maddy made an amazing point there with Bitcoin in terms of institutions are going to have these massive treasuries, and something building off that is BTC-Fi. We had a kind of like hype around Bitcoin L2s and L1s a couple of years ago, and that kind of died down, as they often do in Web3. I think there's still a massive opportunity for BTC-Fi for kind of making your Bitcoin work in a way. So, for example, I'm seeing a lot of companies trying to create yield hubs around. We had one team in the Sweet program who managed to build essentially a native Bitcoin yield hub. So that they're leveraging Eca technology to stake Bitcoin natively whilst on Sui, which is amazing. I've never seen anything like it before, and truly the tech team behind that is amazing. And the kind of thing that validated it for me is the moment they kind of announced even their test net, we saw their socials 4x. We saw them get 7 million transactions in their test net, and just a huge amount of hype around it. And the reason is it's very simple. The idea of Bitcoin treasuries being able to earn 3-4% yield on their Bitcoin yearly, it's not a huge yield, but the ability to hold $1.5 billion in Bitcoin and be able to earn some yield on that, it's just the biggest opportunity we have in crypto right now in terms of what exists right now. What I would say is, though, going back to sort of real world use cases, my kind of thesis has always been, and I think this is ever more true now, payments infrastructure. One of the main things we've always seen is international transfers being one of the main use cases. So, for example, international, a bank in the UK sending money to New York, so the paper trail there gets lost very quickly currently in the financial system. It's very archaic the way they do it. Crypto and Bitcoin and blockchain technology as a whole offers a very clear and easy path to fix this. And I think we're going to see institutions adopt this very soon. And I think that will create a huge snowball effect where it's going to, mass adoption with TradFi is going to happen much faster than any of us who've been working in the industry for several years now could think. I think I'm very excited for what's to come in the next 6 to 12 months, because I honestly do believe we will have our first true blockchain use case.
No, definitely agree. I think now we're in an exciting time and momentum. I mean, you both mentioned, right, with the Bitcoin development now, with the prices, it's a testament where our industry stands right now. And it just, there's so much enthusiasm, not only from our industry, but really the ones who coming also into our space. So I think this is something where we should build on further, right? And an interesting aspect when it comes to accelerators. Earlier in the session, I mentioned a lot of programs are highly selective, and also depending, of course, off the stage. I would like to know, how do you define success beyond funding, especially when you select startups in your accelerator program? What are like the key metrics where you see this is a high potential, they will succeed post the accelerator program? Maddy, how's it, for instance, also with Hub 71 right now in terms of the selection process and in general?
Yeah, of course. So funding is obviously still a key indicator. So we do look at amount of funding raised, but also specifically the investors in the round, because that provides a really good signal to the quality of the company. But there are two other metrics that I think the market is starting to value more. So the first one being revenue. I feel like it's been a bit of a black box in crypto for the last few years, and now I think we're getting around to the fact that revenue does matter. That's the problem when funding runs out. And so I think we're seeing revenue becoming a big driver, and a lot more companies are actually thinking about a path to profitability, whereas in the past it was just a path to fundraising, which is really great to see. And I think it really aligns the incentives correctly for different companies. And the second one is also product usage metrics. At the end of the day, if you don't have a product that users actually love, I think you're really going to struggle. And so we look at like key metrics in terms of that we look at like the retention of users, so like the monthly active users, how is that growing over time, and kind of like thinking about user behaviors, does that match where the market is actually going? I think like a really great success case study that we've seen that like highlights both of these use cases is Hyperliquid. They pretty much like broke Twitter like a few months, maybe even a year ago now. But I think they're a really good example of how like the revenue narrative and also product has become a huge indicator rather than just venture funding. And so specifically at Hub 71, we really do look for those sustainable businesses rather than those just looking for their next funding check. We're actually here to like grow the ecosystem rather than just provide some more runway.
Especially the aspect that you mentioned with community. I mean, if we think about it, all these metrics are interconnected with each other. With consumer-facing application, if you cannot build a community, you cannot really, you cannot really have the right go-to-market. So it reflects on your correct go-to-market strategy, right? And
I have a lot of thoughts on community metrics as well. Like I ran a growth studio in Web3, so I have a lot of thoughts on what is real versus what is not real. But I think that is definitely something to bear in mind as well.
Definitely, especially if it comes, as we know, they're like metrics, as you said, are they fake followers? Like there are specific things we have to take care of as well, especially if checking social. So completely agree with you on that. How's it for you, Tom? Like, what are for you the key metrics also at Brinc? Like when you select your startups, like, is it the same with Maddy? Are you differentiate based on the programs you offer?
I partially agree. So I think revenue is obviously a really nice thing to see in an industry which hasn't prioritized it at all. On the other side of it, revenue often equates value extraction from retail. So you see that from Punk Fun, you see that from some of the top earning companies in Web3. And on that basis, it's not the main thing I look for, and rather, I think success metric for an accelerator, and depends on the type of accelerator. So a lot of what we do is chain ecosystem accelerators. In that case, it's really helping them with customer acquisition. And I think customer acquisition rather than revenue is probably the most important one right now. Can they actually find a niche where people want to use the platform? That's not always the case. I think we've already mentioned like with TradFi coming on. B2B is obviously a very tough nut to crack, especially when you're coming from an industry that doesn't come with the best reputation, and TradFi being a very traditionally safe industry in some ways. I think customer acquisition and retention in an ecosystem for what we do, for example, with TUI, is probably the most important metric. It shows that we have not only helped that project land into an ecosystem, but use that ecosystem and leverage that ecosystem and grow and become a part of it. So one of the things I love to see, for example, is partnerships being formed with an accelerator. So, for example, with Bergen work, an accelerator we did last year, I think every team had at least 2 partnerships formed with other teams in the cohort. It doesn't mean that all those partnerships materialize into something major. It does mean that at least we had 10 very solid cases where the teams had built something together and would therefore stay on the chain and build that ecosystem. And that's something we need more of. It's sort of this partnerships that form more conviction within the ecosystem. Revenue, obviously very nice to see. I'd say right now, customer acquisition proves, and I don't hate teams that go just the next funding round, especially in an industry that needs to find product market fit. I think them acquiring customers very much justifies their future within the industry, and I think that's very important.
It's it's great when you mention partnerships and having this strategic perspective, because one part of track record is as well especially if you're early, right? You're still building the community, but if you can prove you working on having the right people on board, doesn't matter if it starts from advisors, other corporates, or ecosystem partners as well. I think that's also one of the metrics where you see the effort and the commitment of founders as well on scaling up. The super great inputs. One thing also at the blog, we are also trying to support if startups are coming into the UAE, for instance, with Vara. There are different regulators, of course, in the UAE, but also beyond. And since both of you have startups from all type of countries and also based in different, and also your programs are based in different regions. I would like to, uh, I would like to see, especially the programs you're working at right now. What is the role of regulated players impacting the startups you have in your cohort, and how you as Accelerator are supporting and building the bridge to the crypto native founders and also those institutional players? Like, what are the initiatives you may build on? Maybe starting with you, Maddy. Mm.
Yeah, of course. So the Hub 71 digital asset program was co-founded with ADGM. And so ADGM are really the backbone of the program. And it's a big part of the value proposition as to why startups are moving to specifically Abu Dhabi. So ADGM stands for Abu Dhabi Global Market. And I think that's how a lot of crypto companies are viewing the regulator. So we're seeing a lot of startups setting up, particularly foundations here, to then scale globally. It provides the infrastructure that has a bit more institutional credibility rather than going offshore, which is, I think, why we're seeing a lot more demand in the region. And so we're specifically seeing demand for like the DLT foundation frameworks, the stablecoin licensing, and there's a whole other range of licenses that we're seeing startups apply for. But in terms of how they get involved in the program, they get consistent touch points with ADGM. So we do work hand in hand with them. So we do overview sessions, one-to-ones. They're involved in all the different community building activities. So we really do work hand in hand in that respect. And I think even just speaking to different like blockchain foundations, whether it's big or small, ADGM is really getting a lot of traction. I know Vara is as well. And Sarah, you probably have a lot more context on Vara. But I definitely think it's a testament to startups and crypto moving to the region. So it's a good sign, I think.
No, super great. No, thank you. These are very great examples also how you work closely with regulators, specifically with Hub 71 and ADGM. How's it with you, Tom, as well? Since also with Brinc, you have different programs, as you mentioned, recently launched in North America, but also you're super active in MENA. So how is the role of regulators for Brinc as well?
Yeah, I mean, firstly, super interesting hearing Maddy. Obviously, they're working super closely with the government in UAE and doing amazing work. I think from our side, my job is to sort of just help bridge those two, startups and regulators. So, for example, during SUI, we had a fantastic workshop from Vara, from Rakdal, from some amazing lawyers as well who helped startups formulate thoughts in terms of how they would approach regulation. Um, it's also amazing to see, by the way, in MENA specifically, how helpful and willing the regulators are. In no other country in Europe, this would never happen. You would never get regulators coming to an accelerator and asking to explain what they do and to help startups understand that the amount of support that's on offer in the UAE is just amazing. I'd say secondly, one of the cool things about what we're doing at the moment is because Brinc is not just a Web3 accelerator, we run programs across climate tech, we've run programs with governments in the Middle East. Um, a lot of what we're doing right now is helping those companies in our pure Web3 accelerators connect to traditional players in Web2. And a lot of that comes down to helping them understand the regulation around that. And just talking to, for example, we had a company talk to someone who is head of commercials at a bank in the UAE. And that gave them a huge amount of insights in terms of how banks actually perceive future regulations. and how therefore they can structure their offers going forward. So not only talking to pure regulators, but also talking to the institutions who are watching what regulators are doing.
No, it's super great. I think for even this is where we see like overall in the industry, right? You're building the bridge not only between the founders to investor or other partners, but also really to the regulators to really play an active role on building that bridge and push there also the compliance. So super great examples also that you mentioned. When we talk about investor perspective and investor fit, at the end, the ideal goal is, of course, at the end of a program that they get successfully funded. And my question to you is, where should strategic capital, token funds, or family offices play a role for your startups once they have graduated? Like, how important is the role of the investors? You're also engaging with, maybe you can share with us some experience on that based on your current and past programs. Maddy, how was it for you in terms of collaborating with investors?
Of course. So bearing in mind that they've, let's say, finished an accelerator program, and so this is the next stage of funding, in terms of the value that investors can provide. So based on the interactions I've had with the probably top founders out there, and also a few years ago, I actually did a research report where I interviewed over 50 Web3 founders and tried to understand what portfolio support they most valued. So I have like those two buckets of context. I believe, I think if you're backing the right teams, they're going to need two key areas of support. Number one, which is like introductions and opening doors. So whether that be to other investors, potential partners, or potential customers, regulators, I think that's a really big unlock that you can provide. And then also on the other side, in terms of scaling, top talent is particularly hard to come by in Web3, and it's becoming more and more difficult. And so I think if, as a fund, you can build a strategic edge around actually supporting through introductions to help the business grow or whatever pain point they have, kind of supporting them out, and also matching them with the right talent that they need to essentially get to that next growth point. I think those are like two key unlocks that you can provide to companies.
No, super examples. Super great. No, thank you for that. How's it for you, Tom? Like based on your past experience, also for being hands-on with investors and the cohorts as well.
Yeah, so there's one way I look at it, which is the biggest value add you can ever get from an investor is one that helps with distribution. So, for example, we have one team in the cohorts in Sui who are trying to connect to a lot of institutions and trying to create infrastructure for essentially data tracking on blockchain for financial institutions. And they are currently raising from banks, which is a very difficult thing to do. But they managed to do it, and the kind of doors that opens is huge. So any kind of player that helps you with distribution is always going to be helpful. And there's a lot of use cases, a lot of cases of that. For example, if you are doing a car data company, getting investment from a car insurance company or from a maps provider, or from a firm like Microsoft or Google, that's a huge value add, and it helps you a lot in terms of accessing data, but also accessing the customers they currently have. It's a harder route, especially if you're trying to raise from Web2, but it is incredibly rewarding, and I think that is one of the. If I was to advise, and when I do advise startups in terms of how to approach fundraising, I always say, allocate some time to try and find the strategic investors who are going to be able to both be able to support you, but also benefit from what you're currently doing. Because there is a huge amount of value to be derived from this.
Yeah, it's like so-called smart money, right? It's getting on really the active hands-on investors on board. I completely agree with that. At the end, it's also in the best interest of an investor, right, to have to support and scale your portfolio company as well. And coming now also slowly to the end, and our last question. as you both are super active in the accelerator and the Web3 space, how do you see the role of Web3 accelerators shaping really our Web3 industry in the future? We see already more adoption. So where do you see accelerators path going to? And do you think accelerators will evolve more, like in DAO-driven, decentralized format? Yeah, how is your vision in terms of accelerators? Starting with you, Maddy.
Okay, so I have a bit of a controversial take on this one. So I think the premium of accelerators is actually changing. The market is changing fundamentally a lot because access to network and information is becoming more and more accessible. So for instance, like even with YC, they put out so much free content nowadays. The value really either comes from like the stamp of approval, like of being part of the accelerator, but again, that's still a very, very small amount of accelerators. Because if we think back to how accelerators started, like you had YC as the original push, and then now we have thousands of accelerators, and a lot of them actually have very similar value propositions. And especially now with founder communities being more accessible or angel investing being more accessible or venture, there's a lot of ways that startups can actually get the support. And so I think in terms of how Web3 accelerators will move forward is they need some form of an edge. So whether that's like a specific focus, so for example, Hub 71, their edge or their focus is the fact that it's the Abu Dhabi market. And so it's rather than it being framed as an accelerator program, it's more framed as a market access program. And so I think in order for like accelerators to have an edge, there needs to be like a core USP to that accelerator and a core focus as to why they join that accelerator, because there's probably a selection of 50 other accelerators they could join and get similar kind of support and knowledge from. So that's more of a landscape controversial take, but there's accelerators do have a place because founders do need that support. I think it's just about providing the right support and where they actually need it.
I really like your take. It's more really evolving and learning from the past, right? And from the programs we had in the past. No, super great intake. How is it for you, Tom? Like, where do you see the future of Web3 accelerators heading to?
Yeah, I mean, for me, accelerators are always going to be a fundamental part of the sort of startup evolution stack. They're essential, right? There are so many first-time founders who don't necessarily have experience or access to knowledge. And Maddy made a great point in terms of like so much of this learning is available from some of the best minds in the world through YC YouTube or whatever else. And so it's true. We have a lot of startups that come in who kind of already know what they need to do, and it's more like, can you help us execute it? And I think that's where so much of the value comes from. And you're not, when you bring on an accelerator onto your cap table or as an advisor, you don't just get one person kind of helping access their network. You get a whole team, a whole whole engine behind you trying to actively find the best route for you to succeed. And I think that's really important. So I think there's kind of two aspects to summarize. Firstly, on one side, for those founders who do need support and who need to help find their niche and find the way they're going to succeed, accelerators can be crucial. We've had some really good mentorship sessions recently where teams who didn't really know how to do customer acquisition, they were doing all basic marketing, they had their funnel sorted out, but like, what gives you that catalyst? What's going to make you really grow? And sometimes I love listening into these mentorship sessions because you listen in and you're like, this is amazing. This is really like exactly what they needed. And this is advice I can give because I've not been in this exact position. And that's the amazing thing about connecting a team to a mentor who's either advised or gone through a similar industry and had similar challenges, because they have that first-hand experience that no matter how many YouTube videos you watch, no matter how many articles you read, you wouldn't be able to get it unless it was from that person. And they deliver it in a way that's fantastic. So that's one bucket. The second bucket is in terms of opening doors. And this is something that's you hear founders ask for way more than any sort of workshop or knowledge. Can you introduce me to this investor? Can you um, introduce me to a potential client? And that's really a huge value add. So much of the business world is still dictated by personal connections. AI, I'm sure, will do a good job of reducing that. But for now, network is still king, and accelerators give network. And I think that's the number one value add for the foreseeable future.
Super great. No, thanks a lot for those inputs. And yeah, we got also questions in the box. One was from Marco. Do you collaborate also with family offices interested in a cohort or mainly VCs? I think it's also how you reach out with how do you deal with investors um, interested in your startups? How do you handle that in terms of investor reach out or investors interested? Maybe starting with you, Maddy.
Yeah, of course, we're open to kind of any investor introductions that are interested in different Web3 verticals, specifically more institutional focused use cases. So we're more than happy to speak to different types of funding because I know founders are always looking for different ways of sourcing capital rather than just the traditional. So more than happy to speak to different people.
Super, super. How's it at Brinc, Tom?
I mean, obviously, funding is still a fundamental part of the value accelerators provide. I love talking to investors because also it gives me a good gauge in terms of like what they're looking at and how I can help the startups we're working with. Um, I am, accelerators will never reject talking to an investor because it gives them so much ease in terms of, you're making my job a lot easier if you're reaching out to me because you're interested in talking to the startup. It's just a fundamental part of what startups need, and that will never change. So, yeah, I mean, always open to talking to investors.
Super, super. And another part is, do you support projects also after graduating from a cohort? Usually it's part of, as a kind of alumna. How is it handled, Maddy, with Elixir and Hub 71 and after also at Brinc? Yes, starting with you.
Yeah, of course. So at Elixir, we maintain kind of constant contact with different portfolio companies. And so Hub 71 also offers specific support to companies that have gone through the cohort. So they have a few different channels of doing that. So they primarily work with the value creation team. And they do different off-site trips. So they'll do like fundraising roadshows. So for instance, they took a few startups to London a few months ago to meet a whole range of different investors. They did a roadshow to Paris where they were showcased at a conference. So there's loads of those small opportunities, and founders can always reach out if they're looking for specific UAE focused connections, Abu Dhabi, like all those kinds of areas. Hub 71 really opens those doors for them.
Super, super. Thank you, Maddy. How's it at Brinc, Tom?
Yeah, I mean, of course, we have a dedicated portfolio team, and they're fantastic. Whenever our founders are raising their next round, or whenever they need support in connecting to, this client or someone we're working with that they saw on the news, portfolio team's fantastic and very hands-on. But secondly, I mean, the thing is, you work so closely with these teams over the course of 12 weeks to 6 months, depending on the length of the accelerator. You really they become friends. They become, extended family. And so I have regular catch-ups with a lot of them, with a lot of the founders I've worked with. And yeah, truly consider them, great people. And I'm open to talking to them and have regular calls with a lot of them.
Super, super. No, thank you. It's super nice, super great chat. We're also coming to the end actually of our session. We touched a lot of different points, but a key thing we learned is really Web3 accelerators. They have been established and they keep evolving and they're here to stay. And I think also being in a close collaboration with investors, it's also the key. And really to everyone also who joined us today, thanks a lot. Also to our panelists, really Maddy and Tom, thanks so much for your insights and inputs. Also in the audience, if you have any specific questions or reach out, send us directly an email to the blog and we can take it up further. And for now, yeah, wish everyone in the call a great rest of the week. And thanks again, the two of you. Thank you.
so much, Sarah.
Thank
Thank you, Maddy.
Thank you.
thank
Bye
you.
bye.